So most Americans are stuck in what I call financial quicksand. They're not stuck because they're lazy. It's because they've really been lied to. Hey, my name is Kent. Today I'm going to try to expose the three biggest financial myths that I feel are just keeping people down, keeping people broke. And I'm going to show you what smart investors, business owners, what they're doing instead. And how did they learn these things? They started with an open mind, and I'm hoping that you will do the same on this video. I promise you, some of this information is life changing. So let's dive in. Lie number one is to max out your 401k. Wow. So here's the deal. Honestly, this is probably not bad advice if you've decided you're happy where you are, you're comfortable, you're getting by, your bills are getting paid. But in my opinion, this is one of the most dangerous myths in personal finance. You lock up your money for 30 or 40 years. Opportunities are going to come to you and you're not going to be able to get to them. You're going to sit there hoping the stock market doesn't crash at the wrong time. You're going to time your retirement. Then you're going to cross your fingers, hope your taxes won't be higher, hope you don't outlive your money when you finally start withdrawing it. Here's the truth. The 401k hasn't been here forever, okay? It was never designed to build wealth. It was designed to defer taxes. And most people are today, they're handing over control of their retirement to Wall Street, the IRS, or somebody else. So what do the wealthy do instead? Well, there's a lot of things, but one of the things they do that counters this is infinite banking. Now, some of you know what that is, some of you don't. You need to Google it, but you need to be real careful as you dive into this. There's a lot of people teaching it. But what this does, it helps people, gives them a safe place to store money, then they deploy it, okay? They become their own source of capital. They don't become Wall Street's source of capital. Number two, saving money in the bank. Banks love this lie. They want you to deposit your check into their bank every month and let it sit there. And guess what they do? They pay you nothing in interest, and then they lend out your money for sometimes 1,000 times interest. Okay? You're the lender, okay? But they're keeping all the profit, and they're getting paid like a middleman that you've never seen. I have deals in my fund that put the power of lending back in my investors' hands, but the wealthy are doing something totally different with debt. They use a tool to counter this called velocity banking. Velocity banking. They access equity and they use the bank's money to pay inefficient loans off faster. They move money into assets that generate income and cash flow that's way more than the interest they're paying, and simple interest when they use HELOCs. Their money is never sitting, it moves. And that movement creates momentum like you've never seen before. So number three, and this is a really big one. So I've heard this before. Taxes, more the better. If you're paying a lot in taxes, that means you're making a lot of money. Good for you. Now this one hits home. It really hits close to home for a lot of people. But the truth is, the tax code, it's a punishment. It's a roadmap, and it's telling you what to do. Okay, politicians go back and forth on this, but it's obvious there are strategies and deductions that those guys are protecting, and they're built in there to lower or even eliminate taxes for those who are in the know. It rewards people who create jobs, housing, and economic activity. That's why smart investors are using depreciation, cost segregation, even energy deductions to reduce or fully eliminate their taxes. So what are the wealthy doing? Again, they're investing in alternatives. And if you don't know what alternatives are, it's stuff like real estate. You know what real estate, and you know what having a rental house can do. But also there's things like oil and gas and private credit and other things too. These are the kinds of things we offer in our Smart Flex Fund. These assets generate income, equity, and they build all kinds of tax advantages. They're better by design. Now, if you stop playing the financial game backwards and you start using some of these strategies that the wealthy have been using for decades, if you want to do that, if you want to learn more about it, drop me a message or comment about which one of these lies resonates with you the most. What I'm going to do is I'm going to create a video on each of these, and I'll send you that video. It goes a whole lot deeper into how I'm using these strategies and what we're doing with our own capital and how you can plug into that as well.